Hey guys, welcome back to the channel. Today we're going to cover today's market session. I'm going to recap it and I'm going to give you guys a preview and watch list of what I'm watching right now. So right now, the two main concerns that everybody seems to be talking about the market and I'm looking at as well is number one, the bond market with yields going up at the pace they are right now. The 10-year and the 30-year have been running up pretty quickly. The 30 years over 5.3% now. That is the highest reading in decades since 2000, since like pre-financial crisis levels. The 10-year is very close to making new highs and eclipsing that 2023 high. So yeah, and then TLT has also made new lows. It's back to like 2004 levels. So overall, that is a big concern. And then number two concern was volatility. The VIX had hit the lowest levels of the year, and individual stock volatility at very low levels. We are not seeing much movement in a lot of things, and the indexes have been melting up over the last couple of days. So very low volume as well, and the bond market concerns. So those are basically what the main concerns are right now and what could cause a equity sell-off. Now, today we saw volatility pick up a little bit, but nothing crazy. Just a recoup of what the market had lost a little bit of last week. Well, we did see bonds actually fall more and we saw yields rise today. And because of that, we did see equity sell off a little bit. The SPY didn't really budge much. I mean, about 0.5%, but it still closed red. Then the NASDAQ was down a little bit, but the NASDAQ was led by memory and semiconductors, so that was a pretty strong thing to hold it up. There were three sectors today mainly that held up the market. There was crypto. Bitcoin was up about $1,500 today. Ethereum, altcoins, all were up today. And yeah, crypto stocks were up by the likes of Coinbase, MicroStrategy, and some of these miners. Then semiconductors, with all, you can see them all here: Lam, TSM, AMAT, ASML, Micron. All of these were up a decent amount today. And then memory, with SanDisk leading the way up 9%, and then STX, WDC, DRAM, the ETF, SK Hynix, all of these up. So those are the clear leaders today. The laggers were the Mag 7, obviously. Microsoft was down $15 today. We had covered how Microsoft was looking like a short and looked super extended over here on August 10th with this back-to-back upper wicks on the candles. We saw on August 7th a big upper wick, and then August 10th a big upper wick, and rejection of that 513 level. So we thought that it was a short there, or at least an exit spot if you were long. And since then, we've seen about a 5% pullback down to 480. So for people who trimmed up there and de-risked, good for you. People who shorted as well probably made good money there. So that on Microsoft. The entire Mag 7 was down today. Meta as well took a beating a little bit, 3.5%. Then another weak sector was software. We saw names like Intuit down 3%. We saw the cybersecurity names sell off a little bit. PanW, CrowdStrike, Net. Cloudflare, Net is actually a name that we shorted on Thursday, like up around here. So this has worked pretty well as a short so far. I think these are super extended and they're going to mean revert back to their 20-week moving averages pretty soon. Yeah, overall, that's like the main gist of what happened today in the overall market. Now, on individual names that I'm looking at, I forgot to cover energy, but energy. We've talked about this many times. Energy looks amazing, and these names are trending. XLE is just going upwards. It's just about to make new all-time highs. Energy looks amazing. Next up, we're going to cover what I'm watching currently. Number one is Venture Global, ticker WG. So this has formed a pretty sizable base over the last couple of months, dating back to March. It's going sideways. Chart looks great, and it's basing right under this level at around 14.2. So I did buy some of this today when it undercut that or came down to the ADMA. I bought. So would like it to push through that 14.2 level in the next couple of days. Overall, it looks coiled. Weekly chart looks coiled. Looks poised for a move into possibly $20 a share. And it's a natural gas and oil name, energy name, so it fits with the theme. As long as energy doesn't collapse, this will probably do well. Now, next up was SanDisk. SanDisk has recovered almost 100% off the lows. I mean, it's rallied over 80% off the lows. And like just last week, it rallied 35% or so just last week. So it's made a big move very quickly. Now, this is the spot where it should face some resistance. I think around this 1800 and 1900 zone is where there is resistance on this chart. We have an open bear gap here from July 10th and 13th where that could act as resistance right now because we're currently testing that. Also, just have some decent supply at that level dating back to June and around same area around early to mid-July. So I can see this spot as a rejection spot or as a pause spot at the least. But it needs to let the moving averages catch up. Now the 21 EMA is considerably lower, about $300, $400 lower to where the stock is right now. So it does need to pull back for sure, or at least base for like 2 weeks or 3 weeks or so. But yeah, that's what I see on SanDisk. First Solar, I exited most of my position what I had left when it closed below the 21 EMA. I had taken considerable trims in the 240 to 260s area. So on majority of my trims, I made around between 20 and 30%, but the final trims were down to like 10% gain on the final exit, or even less, 7 to 10% on the final exit. But overall, that was a successful trade. Maybe I'll add, if it comes back down to the low 200s, I'll probably buy it back. SOXS looks interesting as well here with the semiconductor index. It just doesn't look that as convincing, this rally, compared to what we saw, let's say, off the bottom in March and April. This was just a V-shape, just historic. Within a week, we were at all-time highs again, and this was just very quickly. This feels more of like a melt up into a lower high. What I talked about on the Substack was how this looks kind of similar to what we saw in 2024 with the S&P and the NASDAQ continuing to go higher throughout the year after the summer. But after the yen carry trade, the semis had topped, and the semis just went sideways until early 25, where then the entire market rolled over when semis rolled over. So I thought that could be a similar thing to what happens now, where obviously the S&P made new highs, the NASDAQ is close to making new highs, but semis are still fairly off their highs. The semiconductors are still 15% or so off their highs. So doesn't convince me as much as the last time did. And there isn't really fuel for it either, with the VIX being so low. You can't, like, let's say an example like what happened in April of 2025. The VIX was in the 50s and 40s for a long time, so there's a lot of fuel to bring it back up, and the whole market was so beat down. But now after you have like a 400% run off the lows, 500%, some stocks even 10xing off the lows or even more, there isn't that same fuel anymore for these to continue to keep going higher. Most of the charts are kind of broken, and they're going to need a long way of sideways to repair themselves. So in the short term, though, I do think at least it should probably come back down and retest the 21-day moving average. That's about 3 to 5% lower. We could see a little rollover there, I think. Just pull back into this zone that could act as demand, but that's what I see for right now. And also, we have these upper wicks that tends to make me a little bit cautious. Now, next up, SoFi. This is still just coiling underneath that level. Nothing really new developments here. Enphase, I don't like today's action, but I am still long. I've been selling a lot of calls against it, so that's been helping me keep my position from not being in like a decent side loss. Been selling calls every single week since June when I bought it like in the mid 40s. So that has helped me a lot. But yeah, I mean it's just doing nothing I guess for now. I mean the weekly charts, and I would have thought it's gonna make its move to the 50, but to 50, but we have to wait and see here. The structure is still intact, so I'm still staying in it. Next up, NVO. I don't like how it retraced from like 47.5 all the way down to here, but the weekly chart, everything's still intact here. It looks like that bottoming structure, and I like it. So would like to see it reclaim that 21 week moving average at 46.5 by the end of this week. Today was an ex-dividend day, so that's why it's down. Half the losses from today were from the ex-dividend day. But yeah, that's it for NVO. Vistra, nothing new. I mean, it's down 1.5% today. It's still above my entry level. It's above my risk tolerance. So just waiting in the trade. As you guys can see, my entry was around 143 or so, and I'm risking that 134, 135 area. So still intact, everything there. Coinbase in a range since start of August, so watching for that range break. A lot of crypto charts like this are super coiled with MicroStrategy, especially in this one, trading in a tight range. This has been trading in a $10 range since the start of August, so it's gonna break soon. There's gonna be a big move out of that range break. So waiting for that range to break. Got a trigger here probably at 155, and if it wants to go to the downside, trigger at 145, but I would prefer upside for these crypto names. And along with that, MicroStrategy, this one has been in a range actually for a month longer. It's been in a range since the start of July. So this one has been in a range between 90 and 105, and yeah, gonna be waiting for that range to break and gonna play this accordingly. And yeah, when these things are range bound for this long, especially these volatile names like MicroStrategy and Coinbase, you're going to see like a 15 or 20% day in one trading session out of this range. So you're going to get some fireworks probably out of this range. Next up, AMD. I covered a good amount of my short on Friday at the close just because I didn't want to take that over the weekend, but I still held some, and it was down today. But yeah, I'm on what I was holding over the weekend. I'm risking 530, a daily weekly close about 530. But yeah, until then, just staying here. Would like it to break down and go lower, but just have to wait and see. On CrowdStrike and Net, again, I've talked about the setup many times. What I saw, the bearish divergences have been adding up on these charts, and they're going to play out. I mean, you can see it clearly here on CrowdStrike. Waiting for it to correct to the 20-day moving average at the least. And ideally, actually, this party said the 20-week moving average. That hasn't been hit since April. I mean, even the most viciously ripping names like SanDisk even pulled back to that in this recent correction. Micron as well. So this is overdue, and these probably need to pull back to their moving average. Cybersecurity theme in general has been stretched to the max. Also, PanW had the same divergence again, where dating back to late May, new highs every time on the stock, but lower highs on the RSI. It's momentum waning. It's going to roll over now and probably pull back at least 10 to 20% at the minimum. Net, same thing. You guys know what I'm looking at there. Same old thing there. Anything else that I want to take a look at? The Dow lost the 10-day moving average today. 20-day right on top. The Kospi gapping up consecutively the last 3 days. It'll probably gap up again today because of the memory trade strength, but we'll see what happens after that. Still below the 50-day moving average though, so hasn't fully recaptured its like trend. Oil has been really strong, as you guys know, the energy names, I've been talking about them, they're strong. But the commodity itself, oil, has been very strong. That's been surprising with all of the positive headlines, or say, coming out of Hormuz. I think there was a headline this morning talking about how they're close to a deal to open it, but at this point now, the market doesn't even buy it anymore. You guys know what I've said about in the past about how headlines have a diminishing effect over time. As they're repeated over and over again, the market cares less and less about them. And that's clearly evident with what's happening with the Iran war. The market does not care anymore. But yeah, that covers everything I wanted to look at. If you guys enjoyed the video or got something out of it, please make sure to like and follow me if this is on Twitter, and subscribe and like the video if this is on YouTube. But thank you guys, and I'll see you guys in the next video.